All right, today we're going to dive deep into the trader's mind. We're going to trace the evolution of how people even think about market analysis, from just charts and numbers to the one psychological key that really separates the winners from everyone else. Let's get into it. So let's just start with the big question, right? Why is it that with all the information out there, all the strategies you can find online, that so many people still struggle to find any kind of consistent success in the markets? The answer? Well, it's probably not what you think, and it's at the very heart of what we're exploring today.
So here's the game plan. We're going to start with the way trading used to be done and the huge flaw in that approach. Then we'll look at how a new way of seeing patterns came about, which, funnily enough, led to an even bigger discovery about the mental game. We'll break down what a winning mindset actually is, touch on some weird paradoxes, and wrap it all up with the final frontier, which is you.
Okay, let's kick things off with the first stage in this whole evolution. We're going back to the original playbook that traders used, and we're going to uncover something called the reality gap.
Back in the day, say the 1970s, this was everything. Fundamental analysis was pretty much seen as the only real way to trade. And the idea, it's pretty simple on the surface. Study all the economic data, the company earnings, supply and demand, and from all that, you can predict where the price should go. It makes perfect logical sense.
But, and this is a huge but, there was a critical weakness. Markets aren't just logic and spreadsheets. They're driven by people. And people, well, we're not always rational, are we? Fear, greed, panic, all that stuff makes traders act in ways that totally fly in the face of the fundamental data. This created this massive gap between what should have been happening and what was actually happening on the screen. So, that massive gap, it pretty much forced the next big shift in thinking. Traders desperately needed a new way to see the market, one that actually dealt with the reality of how humans behave. And what's so cool about this timeline is you can literally see that evolution happen. You have fundamental analysis just dominating the scene. But then, right there in the late 70s and early 80s, you see technical analysis start to creep in and get accepted. And that set the stage for where the real focus is today, which is mental analysis. And this just lays out the difference perfectly. Fundamental analysis is all about looking at the economy to try and predict what's going to happen next. Technical analysis, though, it's not trying to predict a thing. It's just focused on identifying the patterns that are happening right now, patterns created by what everyone in the market is doing collectively. I mean, this was a total game changer. Instead of getting into an argument with the market about what it should be doing based on some economic report, technical traders just decided to listen to what the market is doing. They figured out that human behavior, as messy as it is, tends to repeat itself in patterns you can actually see. And just like that, the reality gap started to close. So, problem solved, right? Learn the patterns, make the money. Well, not so fast, because traders quickly ran into a brand new problem. A new gap that was maybe even more frustrating than the first one. This right here, this quote, just hits the nail on the head. You could be the best technical analyst in the world, spotting patterns like a pro, but there was still this giant hurdle, the gap between what you know you're supposed to do and your ability to actually do it when the pressure's on. I mean, does any of this sound painfully familiar? You see that perfect setup, the one you've been waiting for, and you freeze. You hesitate. By the time you finally work up the nerve to get in, it's too late. Or worse, you get into a great trade, but you get scared out at the first little dip, only to watch it take off without you. These aren't market problems. They're your problems. They're psychological. And that brings us to what's really the final frontier in trading today, mental analysis. It's all about building the very specific kind of mindset that separates the traders who are consistently profitable from everybody else. And here's the thing that's so important to get. The best traders, they don't have some secret strategy they're hiding. Their edge isn't that they're smarter. It's psychological. They've learned how to think in a way that lets them navigate all the emotional chaos of the market with total discipline. So, what does this winning mindset actually look like? Well, it kind of boils down to three key pillars. First, you have to truly, genuinely accept the risk of every single trade. Second, you got to learn to detach your emotions from whether a trade wins or loses. And third, it's about mastering the discipline and confidence to just execute your plan over and over again. Let's really focus on that first one for a second, because it's the foundation for everything. True risk acceptance isn't about being reckless. It's about fully, completely, 100% accepting that any single trade could lose before you even click the mouse. When you can do that, the fear just melts away and you can finally act objectively. Okay, so building this mindset, it means we have to get our heads around some really weird ideas, some paradoxes, where what feels like common sense actually works against you in the market. Just take a look at this table. It's pretty mind-bending. You have tons of traders who say, oh yeah, I'm a risk taker, but deep down they're terrified of uncertainty. Or they'll blame a mistake on the market. The market was crazy today, when the real mistake came from their own fear, their own hesitation. And that right there, that's the whole point. You can't get rid of risk in trading. It's part of the deal. It will always be there. But what you can do is eliminate your fear of that risk. And once the fear is gone, it's like your vision clears up and your decision-making becomes so much sharper. So after all that, where do we end up? Well, we end up at the final, and honestly, the most important frontier in your journey as a trader, yourself. See, the real path to becoming consistent isn't about finding some new magical indicator. It's about changing your core beliefs about what trading even is. It's about facing those conflicting ideas in your own head and training your mind to be resilient, just like an athlete trains their body for a competition. And honestly, this quote just wraps up everything we've talked about today perfectly. The market just becomes a giant mirror. It reflects back all your internal strengths and all your weaknesses. To win in the market, you have to first win the battle with yourself. So I'm going to leave you with one last question to really think about. After everything we've looked at today, from fundamental to technical to mental, are you still just analyzing the market? Or maybe, is it finally time to start analyzing yourself?